I think there will be a lot more people joining. So I guess I can start it a little bit now while waiting for more people to join. Let me share my screen. So it is very important to determine if your client can qualify or not, right? It's so important. And it's all come down to DTI. DTI stands for debt to income ratio, debt and income. So someone have very high income doesn't mean he or she will qualify if he has so much debt. So it's the ratio, debt over income, and it should be 50% or less, depend on the loan type. VA loan, sometimes it can be 60%, sometimes even 70%. But if it's jumbo loan, it can be 50, it can be 43. Some bank lower that to even 34% DTI. So it depends on the loan type. But in general, we're talking about conventional loan, FHA loan. Those loans, the ratio should be 50% or less, right? So we need the DTI to be 50% or less. And for every loan, we have to calculate DTI. We have to look at their income. We have to look at their liabilities before we can determine if they qualify or not. Today, I'm going to show you what type of income we can use. For the debt, it's also simple. The debt is simple, debt over income. So the trend in my last more than one section because there's so much we have to cover. We will try to cover as much as possible, and we might have a second section. And for many of you that new, we will come up with exercise for you. We will come up with exercise and quiz just to make sure you understand. We want from now on, almost all training, we will come up with exercise and quiz so that we will make sure you understand and you make sure that too. So we will come up with a training, comprehensive training program so that even new loan officer can learn and can be good. And I will teach you the way I understand. So, debt to income ratio, it can take you weeks to learn because there's a lot of ways you can learn, but I show you my way. And I am so busy, so I come up with my own way of calculate income DTI in my head. So when I talk to my client, I can talk to them and give them an answer while talking. No need computer, no need worksheet, no need anything. So that is how I come up with my own way. But you are new, you need to use worksheet. And then step by step, you need to improve. There's a lot of way to improve. So for me, when I talk to the client, I can tell them if they qualify or not by just talking. That way they trust me even more. Whatever question they ask, I know the answer. And some of you might talk to Lindsay. She's the same. I don't think she doesn't do loan, but she know the guideline inside out. She know how to calculate it and all that. Why? Because she have so much experience. People call her every day and ask a lot of questions. So she become an expert that way. Well, you can be the same too. You need to explore more, try to learn more. And believe me, my goal is try to help you more and more. So let me share the screen. You see my screen, right?
Yes, we can.
Okay, this one, right? You can see this one.
Yes.
So we will cover all types of income. And income must be stable and likely to continue. So this is the key. If you don't learn it systematically, you will forever be confused because there's so many types of incomes. And you cannot remember by heart. It's hard. You need to know exactly what is the guideline. The guideline is simple. All income must be stable and likely to continue. So if you look at overtime and bonus, they will see that you receive it in the last 2 years. Then it's stable and likely to continue. If you receive overtime or bonus only for 1 year, then it's not likely to continue.
And Thuan, you're showing your email inbox.
That's fine. I didn't prepare. I didn't have yeah, I'm sorry. So first of all, the rule number one is all income must be stable and likely to continue. So if the borrower working for a temp agency, it is not likely to continue. So rental income, we have to prove that. But why, like interest income or income from capital gain from stock, unlikely to continue. If you flip house, it's unlikely to continue the income. Income from trading stock, unlikely to continue. We cannot use it. So that rule is so important. Okay. Income from retirement, yes. If it's alimony or child support, maybe. They have to look at the agreement or award letter. Let's say you receive child support and your kid is 17 years old, only 1 year left. So it's unlikely to continue. We cannot use it. So that rule is so important. We need to know what are the sources of income, and then by look at the nature of it and to see if likely to continue or not. Okay, so that is very important. Today we will cover rental income, and rental income can be subject property or non-subject property. And what if you have a loss instead of an income? What you do when it is a loss versus income? We'll talk about self-employed income. Normally, self-employed income has to be 2 years. But what if the self-employed is less than 2 years? And then if you have a loss, self-employed loss, can you exclude it? We talk about RSU income, assets depletion, retirement income. So those are the things that we'll cover today. You can tell me if I miss anything, but self-employment income is pretty complicated because there are three types of self-employment income: self-proprietary, LLC, and corporation. So we will try to cover everything today if possible. But if not, we have to wait until the next section. And I promise I will have more exercise for you so that you can learn. We're going to come up with a lot of scenario to ask you so that you can do homework. You know, what define a good loan officer versus a bad one is you understand the guideline and you can calculate the DTI quickly. Any questions so far? Is there anything that I missed? Okay. So these are the pay stub. When we look at the pay stub, how do we calculate income? It's the same principle. If it's consistent, if it's likely to continue or not. So pay stub is the most difficult document to read because look at this, it's so scary, right? You have salary. So you see salary, the borrower get it, right? And then this look like a parental leave. So we can calculate it parental leave. So it look like this person took time off having kid, baby, and this parental leave is one time, so it might not be included. Okay, parental leave one time, annual bonus. If we see this, normally we have to ask the borrower if they receive bonus for previous year. And if the borrower just moved to this job, then we have to ask his previous employment if he received overtime or bonus for his previous employment. We need to show 2 years of bonus to qualify. Doesn't have to be come from the same company. Okay? It has to be 2 years, the last 2 years. Regular is not important because we have the salary here. This is the shift difference. So this person might work nighttime. So he got extra pay. So we can use this. These things we have to ask because we cannot understand. Holiday, normally we can use it. But these we cannot use. We don't know. We have to ask. So the way we calculate income is we identify whatever pay that we can use. We have to look at is it a monthly or weekly or bi-weekly or every 2 weeks, bi-weekly, semi-monthly, so that we can calculate the monthly payment. By looking at this, it's kind of weird. Check date. We don't know. Normally, it say how long is the pay period, 2 weeks or 15 days, and then we can multiply it. This is more likely to be 2 weeks because it's irregular. It's not on the 1st or the 15th. So very likely this is a 2 week period. And you multiply by 26, you get the annual income divided by 12 to get monthly pay, monthly salary. So this one, you have to take this plus the bonus But then this is tricky. You cannot look at the year to date. You have to look at the amount here and assume that this is stable. So you add the two together, calculate the annual income, and then divide by 12. You get the monthly income. You can add the bonus. You have to calculate the annual bonus and divide by 12. So you can keep adding to the base pay. So anyone have question about calculate income here? Okay, I can move on. This is pretty simple. Hey, Harry.
Yeah, that's long. So I noticed that the lender would typically compare the year-to-date monthly average with the monthly salary income that we calculated. Can you elaborate on that idea and how we can do that?
So sometimes lender always look at the year to date to make sure there's nothing wrong with your employment. For example, if every month you make $10,000, then at the end of, let's say, April, when they look at the year to date, they expect to see $40,000. But if they see 30,000, they will put a big question mark. What happened to your employment? You take time off. So you have to do the same thing. If you take, let's say, 2 months off, the lender might deduct your income, might reduce your income without cause. So let's you say I take a long-term leave, or I have a kid, I stay home 3 months, I didn't work, then the lender is okay with that. They will not deduct your income. But if your income is not stable, let's say you work part-time, and then you also take 3 months off traveling or having kid, they might deduct your income, depend on your employment type. You have to be full-time stable, then they can use your monthly income. They will ignore the time that you take off. But if you work part-time, your income is not stable, they will average out. They will use the year-to-date instead of monthly. So rule number 2, underwriter always conservative. Very important. Always conservative. So they look at the amount and the year-to-date. If it doesn't make sense, they might go with the conservative approach, and your income will be lower. Okay. So if you see anything irregular, you need to ask your client right away. Why? Why it doesn't make sense? You have to ask the question. Okay. This case is a little weird here. This pay stub is very weird because this is at the end of the year, right? And that's why you see 87,000 year to date. But the salary here year to date is here. This company have a weird pay stub, but it's not that it doesn't matter because we have this here. Imagine we don't have this line, we're in trouble. So the lender always look at the year to date. For example, additional shift here. This person working additional shift or wrong different shift, he get extra, and the year to date prove that, right? So this prove that this type of income is regular and should be count towards the income. Okay. So let me see if there's another. This is the same. Lender also look at the year to date, the W-2 to determine your income. W-2 is just a second check. Normally they look at the pay stub to calculate income. Normally they don't look at the number on W-2. However, if a person make 10,000 a month and the W-2, the lender expect to see 120K. If it less, it show it can be a lot of thing going on. The borrower working for less than a full year, or they taking time off during the year, and we need a letter of explanation. So as a good loan officer, you should be aware of all of this and prepare to explain to the lender. Okay. So let's look at one more pay stub at the same borrower, but this is this year, and you can see the same format here. The additional shift here, that's fine, that's good. This person taking PTO, so he's not working this pay period. So this is normal, that's fine. So there's nothing important. Anyone have question about pay stub? Okay, then I can move on. Here, I think our underwriter calculate the income for us. So it's about 10,000 a month, and the shift difference is about 2,000. So we have 12,000 income. I don't want to dig deep into this because I want to show you this is exactly what I said earlier. Biweekly pay, 2 weeks, right? Multiply by 26, divide by 12. That is the monthly income. Exactly what I said earlier. And then the SIP different. The lender also use the year to date in the calculation. And I think this one might be another section. Our underwriter will show you how to calculate this in detail. Okay. Yeah, it's really complicated. I don't want to go into this because it takes hours to go into this. Next time we can break it down and go over if anyone wants to. I want to try to cover all the important type of income and the guideline how to use them. The bigger picture instead of going to the detail. If I go to detail, it will last forever and you get distracted. It's for me, what important is the guideline, what I can use, what I cannot use, and I can roughly calculate it. It's more important. We always need to know the big picture before we can go into the detail. So feel free to stop me if you have a question.
Now, in general, we can send the file to underwriting to have them calculate income, correct?
Yes, but I do expect that you try to learn.
Yes.
You cannot rely on underwriter forever. And the reason is you need to understand the guideline. You need to understand so that you know that when you ask underwriter, it takes time for them to return, right? But then sometimes your client cannot wait. They talk to you, they want to know if they can qualify. You need to be able to come up with the answer yourself. Of course, underwriter will try to help you, but we want you to be able to calculate DTI yourself. So it's important. And it's not difficult, trust me. Yet some of you might you have to put aside the fear and try to do it yourself. It's not difficult, trust me. And I will ask underwriter to train you. We will have more series, more training in the future. I asked underwriter Brian already. He will train us. We might have like maybe 2 more sections to cover simple loan, like W2 calculation. And then we go to the detail, like for rental income and self-employed income. We will cover with a lot of example and exercise. We will have to make sure you are good at calculating this. So let me continue.
I have a question.
Yes.
The combination between W2 and self-employee. Here is an example. A buyer works for 8 months as self-employee and went back for 4 months as W2 and then work 12 months. So how many months of self-employee should be counted to qualify this person?
Okay. You don't calculate like that. There are 2 scenarios. One is when you are W2 and then you become a 1099. And the other scenario is you are 1099 and become W2. Okay. So if you are 1099 and become W2, all of your 1099 employment disappear. You cannot use it. They will use your W2 employment only. They are considered you never work. For the time that you are 1099, it disappear. You are considered not working. So for W2, it's pretty easy to qualify. W2 normally stable and likely to continue. So even recent graduate, we can use the income right away, W2. If they finish school, even they have a job offer letter, we can use that to qualify, to close loan. So W2 is super easy. All they ask for is you have a history of receiving W2 for 1 year. History could be 5 years ago, 10 years ago. And now you have a job. The second rule of W2 is you have gap of employment. If the gap is more than 6 months, then your current W2 job has to be 6 months or longer. But if the gap is less than 6 months, then when you start a new company, you can use the income right away. Okay. So let's say if the borrower quit job, stay home, have kid, 5 months later, start a new job, we can qualify him right away. We can use an income because the gap is 5 months. But if he stay home for more than 6 months, then he need to stay at the new employment for more than 6 months to qualify to use the new income. Hey, Massey, you have a
Yes,
question?
can you hear me?
Yes.
Perfect. Couple of questions. One is for complex returns with corp returns and all that. Is there a place like some lenders have where we could upload the tax returns and get a reply back on what it translates to? And the second question is, because usually I'm used to running our own 4506s. Do we have to run that at all? Or do you guys run that, or does the lender run it?
What do you mean run the 4506? What is that?
Tax transcript.
Tax transcript. The
Correct.
team, the processor will
Correct.
take care of that for you.
Okay. So we
And
don't
the-
have to run it ourselves. Okay,
Yeah.
perfect.
The first question is something that I will cover later on today. And then
Thank you.
I will cover more. We will teach you how to calculate, even complex situation. We teach you how to calculate that. And you can always ask underwriter to help you too. But again, we will push you to learn. You should not be afraid of any situation. Hi, Tiffany.
Yes, hi, Anton.
Yeah.
I just want to make a comment on Guy Tom question because I have a real scenario. My sister, she used to be a sales employee in North Carolina, and when she moved to California, she only need to work for 1 month. They send work verification of employment to her employer, and she was able to get a loan. So
Yeah, W2 is super easy, okay? Because it's stable and likely to continue. But if you are 1099, it's different. So for what I understand, if you are 1099, you need 2-year tax return. And if the length of 1099 is between 12 to 24 months, you need to prove that the previous job is W2 and it's related. So that is what I understand. Then you can use the income. Less than 1 year, self-employed is impossible. They always ask for 2-year tax return. However, with self-employed, if you own your business, self-employed is the same thing that you own your business. And if it is more than 5 years, we can use 1-year tax return. So when we calculate any unstable income, remember rule number 2, conservative. The lender is always conservative, right? So any income that unstable, they need 2 years to calculate. And if the latest year is lower than the previous year, they use the lower one, which is the latest year income. But if your income go up 2 year, right? The latest year is higher than the previous year, then they take the average. They're always conservative. They take the lower, okay? So if your income go down, they take the lower income. If your income go up, they take the average. That is the conservative. For bonus and OT, normally there are 2 ways to calculate income. The first way is to get the VOE from the employer or from the work number, and then they can calculate the income. And it's the same thing, the same principle. If your OT go up, they take average. If your OT go down, they take the lower. That's the first way. The second way to calculate OT or bonus is to do a VOE. I'm sorry, the VOE is the first method. The second method is the borrower can submit the latest pay stub of the previous 2 years because the pay stub have year to date. So they can use year to date over time for the previous 2 years. And then they will take the conservative approach. They take the lower one or the middle one. Also, they calculate the year to date of this year too. So the detail, we have another section to go into the detail. But remember that it's always conservative. And we need 2 years because it needs to be consistent and stable. Okay. While waiting, anyone have question for me so far?
Hi, Thuan.
Yes.
I don't have a question so far, but I just want to pointing out I had a loan before with UWM. the borrower is the nurse. So it's really hard for nurse. They have 60 hours fixed hours, but they will have flexible hours called overtime because the nurse taking turns. I'm not sure other career, but just this career I've been saying so far, this has to be, like you said, variable income as well, 2 years at least.
Yeah. So travel nurse, most of them, the nature of their job, they work for a temp agency. So it need to be 2 years. Otherwise, we cannot use it. And normally they work for more than one agency. So the way we calculate is completely different. We cannot use all of them, all of this income. We cannot. That is travel nurse. Okay. So let me continue about self-employed income. So self-employed income normally 2 years, 2 year tax return. If it's less than 2 years, then we need to have prior experience, similar field with income. We have to justify that. And if you're self-employed, what happens if you have a loss? What happens if you have a loss? Normally, you can ignore it. Let's say you have a self-employed income. I mean, you have two jobs. One is W-2 and one is you work on a side business and you have a loss. So the lender will allow us to ignore the self-employed loss. Okay. So we can just say, okay, you have to mention you have that employment, but you can put zero income, ignore it. Whenever you want the underwriter to ignore your job, you put zero income there. They know that we want them to ignore. And for W-2 income to qualify. Okay. When we have a loss, it will be added to the debt. Remember, debt to income ratio, right? Debt on top, income ratio on the bottom. So if you have a loss, the loss will be added to the debt. And if you have an income, the income will be added to the income on the bottom. You understand what I mean, right? It's important. Hi, Curry.
Hi, Tuan. Yes, I have a question. I have a couple where the wife took some maternity leave and she got laid off, and then she took a new job. She's starting a new job. She's making good income, but she has an offer letter. Can we use the offer letter and the one pay stub to qualify them?
Normally, yes. But then normally before closing, they need a pay stub with 1 month of year to date.
1 month, okay.
Uh,
And then,
So yeah, we have to do the timing.
okay, so 2 pay stubs and then plus the offer letter. Those 2, right?
Yeah.
Okay, got
Yeah.
it. Okay, thank you.
Okay. So overtime bonus 2 years. Now we can look at the income. Okay. Retirement income, we can use it. Some retirement income is non-taxable. So for any income that not taxable, we can roast it up. So we can multiply by 1.25. So let's say the income is 4,000 a month, but it's not taxable. Some of the security income, some of the tax retirement income is not taxable. You can multiply by 1.25. So the income becomes 5,000 instead of 4,000. In-home service support. In-home service support, there are 2 types of income. Some of you might not aware of this income. So a lot of borrower, they stay home, they take care of their family. They receive income from the county. It's called in-home service support. And if the income is taxable, then we can use it. If that income is non-taxable, we cannot use it. But then I saw some underwriter misses and still allow it. I don't know why, but that is what I understand. Hey, Wen.
Hey, Tuan, that last part you just said, the in-home care providers, if they are non-taxable, we cannot use it. But I thought you just said before that the non-taxable income can be grossed out by 1.25. Is that different?
Yeah.
For in-home care? Okay.
Yeah. So what happened is, yeah, I need to clarify this. Thank you for bringing it up. The retirement income, the borrower filed a tax and include that in the tax return. You can see that. Oh, here's my income. It's not taxable. But for the in-home service support income that not taxable, they don't even include that in the tax return. You look at the tax return, you don't see that income. So they don't even report it. That's why it cannot be used. So let me share the screen. Now we look at the Schedule C. You see the tax return. You know, in almost any document, the first 1 or 2 pages are the most important documents. The most information is there. So when you look at this tax return, you look at line 1, which is W2 income. That's not that. You go all the way here, 43,000. And that is the business tax return, the Schedule C. It's not clear. See, if you look at Schedule 1 here, additional income, 43,000 is from Schedule C, which is self-proprietary, self-employment income. Here's the income. Some of you might not know anything about accounting or tax, so it would be a little more difficult for you to understand. So you need to study harder. So to calculate income, remember this, consumer, they are confusing. And some of you might be confusing with the terminology. What is gross income, net income, before tax income, after tax income? Those 4 words are so important to understand. So gross income is the first line here, 57, the total that they take in. The net income is the total you take in minus the total expense. So that is the net income or the profit or the pre-tax income. Okay. And the net income should be the income that we calculated, not the gross income, not after tax income. Okay. Is that clear? 57,000 minus 37,000. The gross income minus the expenses. You get the profit or net income. And the net income is what will be used. But for W2, it's always pre-tax income. So everything have to be pre-tax income. Don't calculate the income tax. Don't subtract it. So 19,000. But if you look earlier here, you see 43,000. So immediately, you know that this loan had 2 self-employed income. This is the first one, 19,000. There should be a second one. The second one here. And it's 23,000. Add up. Okay. And then this is not done yet. You have to look at the previous year income. This is 2022, right? 2022 right here. You have to look at 2021 return and compare. If you see wages here, you cannot use it because it's discontinued. Here you see 35,000 income on the self-employed. This is the first job, 18,000. The second job is 17,000. So in order to calculate income, self-employed income, you cannot use the total number, 35,000 and 43,000. This is not allowed. You have to calculate based on each individual job or self-employment or business. So 2021 is 18,000. 2022 is 19,000. So the income go up $1,000. You take the average of the two, it become your income. And for this business, your income also go up from 17 to 23,000. If you take average, it's $20,000 a year.
Tuan,
Yes.
I think we learned last week, you need to add up the depreciation to the net income. It means there is 6,019 plus 25,000 for the underwriter. Am I right?
Yes. So let me go into detail later. Normally, we go with the big picture first, and then we go to the detail. If you don't understand and you open up the big worksheet, income calculation worksheet, you will be confused. You will never understand. Nobody can understand or master by keep looking at the detail, the worksheet. You will never be good. So I want to teach you how to look at the big picture first, roughly calculated it, and then go to the detail and look at the factor that can increase your income. You know what I mean, right? So if you first you calculate the income roughly, and then you look at the depreciation. You can add it back. One-time item. You can add it back. So this is a good point. In most income calculation, if you see one-time big ticket item that unlikely to continue, you can add it back. Depreciation is one of it too. So let's say if you have a business and last year you spent $100,000 to remodel the office and you deduct it, you can claim it back. You can add it back to be your income. Depreciation, same thing. You can add it back. Last year you bought a truck. It cost you $200,000. You deduct it. That's why your income is negative. But if you add back that item, your income will be positive. So always look for item that to add back. You got what I mean? It's important. So if some of the loan officer out there might not understand this, but if you do, that make a big difference, right? They may say, "Oh, you don't qualify," and then the client come to you. You say, "Yes, we can do it." So you can save the loan. You will win, and that is why we want you to be able to understand the guideline, understand how to calculate DTI, and know how to calculate it. Any questions so far?
Hello, can you hear me now?
Yes.
I have this client. Her income is so complicated. She has a W-2, she has 1099, she has Schedule C, and also the income from the 2021 and 2022 also different, not stable, and
That
it's,
is what
it's
I mean.
so hard to calculate income.
This is not complicated. It's not hard. It's easy. You don't understand it. That's why it's difficult. So 1099 and Schedule C are the same. When they receive 1099, they file tax, they file on a Schedule C. So this borrow doing two jobs, W-2 and 1099. And normally we can use W-2. 1099, if it's 2 years, we can use it. Done. We can use both or maybe only W-2. If you learn what I told you, you can apply it. And then of course, every year the income is different. You need to know if it go up or go down. The 1099 income, Schedule C, if it go up, you take average. If it go down, you take the lower end. W-2 income, you look at the pay stub, you calculate the income. Everything I teach you already. So it's not complicated, okay? That's why you need to exercise. You need to learn. You need to sit down and calculate. And this is what I advise. Do not rely on the underwriter to help you. Of course, you rely on them. But after you ask them to calculate, they give you an answer. They don't just give you an answer. They give you how they calculate it. I want you to take a look at how they calculate it and try to understand. That's how you learn. There's nothing easy. No pain, no gain. You want to take easy approach, leave it to the underwriter, you never learn and you will never be a good loan officer. But if you spend the time and effort, try to understand how they calculate it. I promise you, after 2-3 loans, you know how to calculate it and you're going to be good. No easy path. You have to learn. Okay? So your KT is not difficult. Trust me, it's normal. People have 2 jobs, normal. They have a full-time job, they have a side business, normal. That's exactly your case. This is very normal. And you should be able to calculate in this case. It happens all the time. People working full-time, W-2, and do some business on the side. That is exactly your loan. Okay?
Yes, and I have another question. And her income is not enough. And her question is, how much I need to increase my income to qualify? I know that this is good to advise the client that how much income she must claim in the tax return, but it just happened again and again. It's just like they just, at the beginning, they just normal. They just try to put in the low income to minimize tax. And when they need to get a loan, and then they increase income to qualify. I don't know that's illegal or that's good to advise them or not. It just happen all the time. My client, she not qualified, and now she asked me how much I need to increase income.
You should not advise them anything about tax. Okay, it's their problem, their issue with tax. You are not a tax expert. Do not advise them about tax. You can answer the question, okay, if you want to qualify, if you want to buy this house 500,000 and you want to borrow 400,000, in your situation like this, your income have to be this and this. You can do that. And it's up to them to do whatever they want with their business, with their person. Don't
Okay.
advise.
So I still calculate the income and I tell them that
Exactly. You have to.
The
You, as a
income
loan
level.
officer, you should be able to tell them if your income is this, then you qualify. If your income is less than that, you will not qualify.
Yeah, okay. Thank you.
Thank you. So now, this is the worksheet that's very important. This worksheet will show all of the income and the correct. In order to understand, normally I use the term cash flow instead of income. When you calculate business income or rental income, it's actually business cash flow and rental cash flow. If you use the term cash flow, it makes sense. If you income, it doesn't make sense. In the real world, in any business out there, business always look at the cash flow. Cash flow is important. So W2 income, they put it here. And then if they have dividend, they put it here. So when you do a loan, in order to calculate total income, here are all possible income. 1, 2, 3, 4, 5, 6. All possible income. Income from work or self-employed. Income from dividend. Normally interest is hard to qualify, but you can. Let's say someone have a few $1 million, they buy government bond. They sit there and collect income, collect interest. Those can be count. We can use the interest income or ordinary dividends. So if they buy a stock from a big like a bank that pay a lot of dividend every year, so dividend income can be used. Here's the Schedule C income, profit or loss from business, sole proprietary. So this is 1099 and Schedule C are the same. We have 3 types of self-employed income: sole proprietary, LLC, and corporation. I will go to the detail later. We went over Schedule C already, right? So we went over Schedule C already. So when you calculate income, you start out with net profit. And like someone said earlier, depreciation can be added back. You see the plus here? Non-recurring loss or expense. This is what I said earlier. One-time expense, you can add it back. Non-recurring, same thing at one time. Big ticket item, you incur, you can add it back. So that's it. Move on to capital gain and loss. Remember the word recurring. Last year, your client placed with stock and win $500,000 income. That cannot be used. It had to be recurring. Okay, so stock gain hardly can be used. It's not recurring. Schedule E is rental income. We will go to that later. Schedule C have royalty and all that. Royalty, for example, your client is a writer. They write a book and they receive royalty every year or every month. Then it can be used. Schedule F is farm income. We rarely see that. Partnership or S corporation is number 7. So partnership and corporation income are similar to self-employed income. Very similar. The only difference is found in a different form. Okay. So in sole proprietorship, it is in Schedule C. But in partnership or S corporation, we have 2 things: Schedule K1 and the form itself. So if the partnership, the form, okay, let me slow down on this so that you understand. A partnership or corporation is an entity. It has the right, just like a normal human, like a citizen. So you, as a human, you have the right to own property. You have the right to owe someone money. You have to file tax. You have to claim all the income and expense. Corporation is exactly the same. It's a legal entity. It can have liability. It can have assets. It has ownership. It must file tax. So a legal entity has to file tax every year, just like you. And if the entity is a partnership, they have to file the form called 1065. For you as an individual, you file the form called 1040. A partnership file the form 1065. And A partnership, a corporation will file 1220. Okay. There are two types of corporation, a C corporation and S corporation. By default, when you apply for when you open a company, it's a C corporation. But you can elect, you can apply to become an S corporation. And the S corporation have to file Form 1120. An S corporation file in 520S with the word S on it. I would advise you not to go into detail. Not worth it. It's really complicated. Just know that it can be either partnership or corporation. Okay. And normally a partnership or corporation have one or more owner. Okay. Remember this. A company can have one or more owner. And when the partnership or corporation file the tax return, they need to tell who are the owner. Is it one owner or two owner or three owner? So let's say if there's only one owner, then the owner will receive K1. And on the K1, it shows that 100%. You own this company 100%. Sometimes if you invest in some partnership that have thousands or tens of thousands of partners, then you receive a K1 and your ownership is 0.0001%. So you still receive that K1 and you have to file tax because you are the owner of corporation or partnership and your percentage of ownership can be so little or so big. On the K1, it say everything. Let's say you are a partner, you own some of the company. So at the end of every year, you receive a K1. It will say, hey, you own this much percentage of the company, and this is your income from owning that company. So when the borrower apply for the loan, we need to submit a K1 income. That will show your income, K1 income. And if you own 25% or more of the company, you need to submit the company tax return. So this is really important to remember this, because when you talk to your client, the first thing they ask is, okay, I want to do loan with you. What do I need? What document do I need? Before that, you should already talk to the client, understand what kind of income do they have, right? Oh, you have a business, right? You have 1099. So when they say 1099, automatically you know that, oh, this is Schedule C. It's part of the individual income tax return. You don't need to ask for business return. If they say that they have a partnership or they have a corporation, then you ask, oh, how much do you own it? 25% or more or less. So if it's less, don't ask for the corporation tax return or partnership return. Don't ask for it. Yet ask for K2, K1 return, 2 years. Okay? So anyone have question about this? Very important, and most people will not understand or will never understand about all of this. If you don't understand what I say, watch the video again. We will have that available later on. But it's super important to understand form out there, what kind of tax return, what form do they have to file, and what document do we need from the borrower. Okay? So the rule is simple. W-2, 1 year tax return. Sometimes we don't even need it. It depends on the filing, AUS filing. But if the borrower own a business, 2 year tax return. Simple. They own a partnership or corporation, we need to see K1, 2 year of K1. 25% or more, we need a partnership return, the 1065 or the 1120 form. Okay? Anyone have question? Okay, cool. So,
Thuan,
yes,
hi, this is Tony. How are you?
I'm good. Thank you, Tony.
Good. Thuan, I have a calculator. I want to share with you first so you could look at it, where we could calculate all of these incomes, S Corp, partnership, Schedule C, Social Security, everything, dividends, retirement. I have a calculator that does all this for you. It's a fillable. You just follow the steps, you fill in the numbers, and it calculates the income for you. But I want to share with you first, of course, as the CEO, so you can look at it, see if that's viable for everyone else to share.
Sure. I think our
I'll
underwriter,
email it to you.
Yeah, thank you. Thank you. We would love to have that. Our underwriting team also have a worksheet to calculate on. We do have it. And all lenders have this as well.
Oh, okay. Okay.
But we want to take a look at that. And I think we'll have more section in the future to go over the detail. We will have more exercise. And we want to make sure everyone do the homework. And then we will go over the number, the detail later. It's important to understand the guideline, understand what's going on, have a big picture before you go into the detail. Otherwise, if you don't understand the big picture, you will never be a good loan officer. You will ask for document. Let's say you don't ask for the K1. Then the underwriter come back, approve the loan, but ask for K1. And then this is how it is. Trust me. You apply a loan without knowing what to ask, submit to the lender. Lender approve it and say, hey, here's the other condition. Show me your K1. And then it takes 3-4 days later, you submit the K1. The underwriter look at it and say, oh, K1, you have 25% interest. Now give me the business tax return. So wasting so much time back and forth, the client will get mad at you. But if you understand this, you ask for everything upfront, you submit it, you get a clean approval. Okay? So you can save so much time if you understand what is going on, what are the income, what to ask from your borrower. Okay?
I agree.
Yeah, it's so important. And it's not easy. It's easy said than done. And that's why we will try to give you exercise so that you can work on. And the reason why underwriters are so good because they deal with this every day. Underwriter is just like you and me, but their job is to work on this case by case, many cases every day. And that's why they are good. And you too, if you want to be good, you have to deal with it. Me too. I didn't know about any of this. I learned it. I learned it the hard way. I don't know, should I go into how to calculate rental income now, or should we wait to the next time? I think we will wait for the next section, calculate rental income. And then for sure, we have at least 2 more sections. This is so important for all loan officers to be able to calculate DTI, to become an expert for any scenario, any case. So let's wait for the next time. Anyone have more questions for me?
Hi, Anton.
Yeah, hi, Tiffany.
I don't have a questions, but I just want to mention that underwriter here are awesome. They provide worksheet. You can use it as your template to work on your scenario. I did that and it works out really well.
Thank you, Tiffany. To be honest with you, I love our underwriters. They did so much. They calculate for you, but they don't throw you at only one number. They don't say the loan qualify or not. They calculate every number. They give you the calculation for you to look at, for you to verify, and for you to argue with them. I have to admit that. So you should take advantage of our underwriting team, but you should not take advantage too much. I mean, you have to learn. I want all of you to learn. So, and we might push it back to you. If, for example, if you are with Loan Factory for 6 months, you close a dozen loans already. And if you have a simple loan and you still ask them to calculate, that is not right. You know, I'm sorry, but I think every one of us needs some kind of pressure. We need to work harder. Every one of us. We should not take an easy approach. And what happened, for example, what happened for some reason, you don't work with Loan Factory anymore. And who's going to help you, right? You need to protect yourself. You need to be good. You never know what happened to Loan Factory. You never know. So you need to protect yourself. Try to be good. Take the opportunity and learn to be a good loan officer. So as you can see, my goal is to help you. My goal is to have all the resources to help you. But we want you to do your job too. You want to be a good loan officer. You want to be able to interview your borrower and find out if they qualify or not at the spot. Not, I call you back later. I let you know later. This is not good. To be honest with you, I don't know how many of you can do the same thing that I do. I calculate DTI on my head when I talk to my client. I have a way to do that. It's not difficult. It's just a matter of if you do it every day, you do a lot, it become a habit. It becomes easier and easier every time. And I do this so many times already. So that's why. So I think it's fun to, as soon as you understand how to calculate all of this, it becomes so easy and it's fun. And you love to deal with the client. You love to deal with difficult clients because it's a challenge to you. So for sure, we will go over this again next week. Let's go more detail. And we will give you some homework too. We want you to do some homework exercise. Okay?
Tuan,
And-
as always, thank you very much for all of your time. This is so valuable. You're so valuable.
Thank you. To be honest with you, you cannot find such training anywhere out there. Nobody gonna teach you this. And if someone teach you this, it's gonna be expensive. But at Loan Factory, we want you to learn. We want you to be good. And you know that if you only need to better than your competitor a little bit, then you win. So if you keep learning every day, nobody can catch up with you. And you can be the top loan originators. Trust me, you can be there. You can be the top loan officers. I'm the same here. I learn everything myself. When I start, I know nothing. I keep learning every day. I push myself that I have to know everything. I need to get better and better every day. And I want all of you to be better every day. So from now on, we will come up with the training. We have a training methodology. We have homework, exercise for every aspect. And I already found one staff to help me with this. So you will see more help coming. Okay? So I will take off now. Thank you, everyone.
Thank you.
Thank
Yeah.
you.
Thank you.